President Malpass, always good to have you back on. What are you guys thinking as far as the world economy and how it looks into the end of the year and into next?
Hello, Sarah. These are hard adjustments. One is on the energy side. There was dependence on Russia, and that the world is trying to adjust to that and to realign. But that takes time. That takes a lot of new production in other parts of the world. And then on the monetary policy side, the interest rates were near zero in quite a few of the advanced economies. And so they need to normalize, and that applies to bond yields as well. So these are hard adjustments for the world to make. Developing countries in particular are under a lot of pressure.
What about the U.S.? What are the odds of recession, do you think, at this point?
You know, odds are, there's always some chance of a recession. They're higher now. We've seen the first quarter weaken. Some of the forecasts are for second quarter weakness. So, you know, it's possible that that's happening. I'm encouraged by some of the trends on the U.S. side, but I think we also have to look at the weakness in Europe, in Japan and in China as being contributing factors for the global slowdown that's underway. So even if the U.S. can stabilize or even pull off a soft landing, that still leaves quite a bit of the world in danger.
And what's interesting about your forecast is you do not see a sharp or a quick bounce back. You expect these lower growth rates to stay. Why?
This has to do with the weakness of investment over this year and in the last couple of years, but also this energy realignment I mentioned. That is a big challenge for the world to make that kind of adjustment, and that's penetrating, you know, into the fertilizer markets, the food markets, and that really slows down developing countries. So if you think about the global population, billions of people are in a prolonged slowdown related to the adjustment in energy and also the adjustment in interest rates that was probably needed even before the crisis.
Do you think we've seen the peak levels on inflation around the world?
We may have seen the peak in advanced economies, you know, and in developing countries, many of them have done already several rate hikes from their central banks. So from on a month-over-month basis, we're probably at the peak. But that still leaves inflation too high for central banks to be comfortable. And also, you know, their portfolios are challenging. You see that in Europe. They're struggling to buy enough of the government bonds to keep bond yields down in the weaker economies. And in Japan, they're struggling to keep their cap on bond yields. These are dramatically different monetary policies than pre-2008, and there's a lot of adjustment that has to be done to get used to that.
Well, just look at the currency market, David. Again, the dollar's strengthening. We've seen 24-year highs against the yen. We're almost at parity against the euro. Emerging markets currencies now in the last 6 months have gotten crushed. You guys at the World Bank and the IMF follow these sorts of things and the disruptions that they have. How problematic do you think this is?
Yeah. Exactly right. It's hard to think that we're stabilizing because of those moves in the major currencies are still ongoing, and that means there's probably quite a few more rate hikes in the prospect outside the U.S. And the U.S. We know is likely to have more. That puts pressure on the debt in developing countries. So that's the reason for thinking of this as a prolonged, difficult period for the world over the next 3 years. And that's on top of there being shortages of natural gas in particular, and that factors into the fertilizer and food markets. You know, it's a direct chain. And I want to come back to this issue that the massive bond portfolios held by the central banks are part of this challenge. How do you begin to unwind that maturity mismatch that resides in the central banks?